This is Rebecca with the Kat and Rebecca Show, Keep It Real Estate, and we have Brian Kavanagh from the Franklin Loan Center, and we're going to talk about kinds of loans. So somebody I've talked to, send them to you, Brian, and you're going to approve them. What kind of loan are they going to be approved for?
Well, we don't really know until we review the information. There's 3 basic loans that are out there. There are a lot other loans that we're not going to touch on today. But the 3 basic loans would be conventional loans. They're insured by Fannie or Freddie Mac. FHA loans, the Federal Housing Administration, and veterans loans, VA loans. Those are the 3 basic loans.
Okay, from my experience, and so we can inform our audience, what's expected with each loan? What's a conventional loan, and what does that mean to the purchaser? What do they need to know about that loan?
Okay. All 3 loans have slightly different qualifications, okay, whether it has to do with down payment, credit scores, or debt-to-income ratios. Debt-to-income ratios is the amount of debt that you currently have and that you're going to take on in conjunction with your monthly income. So only so much of that can go towards your total debt.
Your home payment.
They don't want to see you getting in over your head or not being able to qualify. So each one of those loans have slightly different qualifications. The most popular out there is conventional loans. Those are loans you probably hear Fannie Mae, Freddie Mac. Those are insured by those 2 organizations. Okay? Conventional loans, they're the most competitive. Okay? They've got generally good interest rates, a broad range of terms as far as 30 year, 15 years, adjustable rate mortgages. They're very competitive in there. They're more of a cookie cutter loan as far as qualifications. Over a 620 credit score or higher. 3% down is the minimum. The more you put down, the better it's going to be. They are going to be somewhat credit score driven. Everyone talks about credit scores. They're credit score driven. Okay? The better your credit scores, the better your qualifications will be. Okay? Debt to income ratios are going to be a little bit more conservative, where they might want to keep everything down to, under the low 40s or 45s. There's exceptions to every rule, but they're going to be more competitive with those debt to income ratios.
So you mentioned about putting more down, the lower it goes. What you're saying is if you put a larger down payment down, the interest rate on that loan would be lower.
Not necessarily. Your payment would be lower because you're financing less.
Okay.
The more that you put down puts you in a different tier. Maybe you don't have mortgage insurance now, which is a different topic for a different day, but that can save you money every single month.
Okay, so we're talking about for conventional, a stronger FICO score and as little as 3% down. So now when we go to FHA, where do we need to be on a FICO score?
FICO scores, well, let me back up for a minute. FHA loans started off as a first-time homebuyer's loan. That's not the case anymore. They're for anyone. FHA requires a 3.5% down. Okay. Credit scores can go lower. Technically, the credit scores can go all the way down to 500 if you put a sizable down payment down. Not 3.5, but 10. Harder to do those loans because there's going to be some issues that you've got to overcome credit-wise and so forth. But back to FHA loans, you can stretch the debt to income ratios up a little bit higher. Your income sources can be a little bit newer, and your down payment is 3.5% down with a flat mortgage insurance across the board.
Okay, and now we have a VA loan. So we now know you need to at least be a veteran to get a VA loan.
Correct. You have to be either in service right now or discharged from service. Okay, those are the 2 requirements. You have to have served so much time in the military in order for us to get a certificate of eligibility. Okay. VA loans are it's a great loan. Okay, they benefit our veterans, and there's no mortgage insurance. There's no down payment required for most VA loans, and credit scores can be lower. There's no minimum credit score for a VA loan.
Terrific. So now you can see that there's a lot that goes into each type of loan and everybody's unique situation. So again, you really do need to talk to an expert when you're ready to get your loan. So until the next show, we'll go into more detail on some of these items.
And keep it real.
Keep it real estate.